Hi, everyone. Thanks for having me. Thanks for the opportunity. My name is Shaun Cathcart. I'm a senior economist at CREA. And today I plan on presenting a slideshow. That's how I like to do these things. I put slides up that I think are interesting to look at and I talk over them. So you won't have to look at me talking the whole time. In the interest of time, and without further ado, I'm going to jump right into it. It's mostly about demand and supply in housing markets across Canada, what that looked like before COVID, what happened during COVID, where we are now, and maybe what to expect in 2021, although I hope that by the end of it, you'll all be able to sort of draw that conclusion for yourself. I'm going to share my screen right now. Okay, so pre-economic housing market update. It's mostly going to be data that we at CREA produce that comes from local real estate boards and associations across Canada, but I am going to start off with a bit of StatCan data because I think it's important for understanding housing demand. And this is one of those, you don't need a complicated econometric model to figure it out. You sort of, if you want to know if it's raining, you stick your head out the window. And so I'm going to start off with a really basic chart here, which is annual population growth in Canada. You know, people need somewhere to live. People create demand for housing. Have a look at what happened in 2018 and 2019. I mean, that was a huge increase. We're talking about, this is annual in numbers. So, 150, 200,000 more people every year. That was a huge ramp up in international immigration under the Trudeau government, but it's been sort of something that, economists have been talking about for years, that ultimately, when we go from baby boomers that are at retirement age, where they are now, to baby boomers who are elderly, in order to support Canada's social programs, you're going to have to really ramp this up. And so obviously we had a bit of a blip here because of COVID, and that's ongoing. It's not expected to last forever. When you think about years and decades, and especially if they decide to make up for lost time here, we could see these numbers way up here where we've never seen them before. And I think that, just this on its own is something that's going to help sort of bake in housing demand for as far as the eye can see. And as you'll see in a minute, I'm going to focus more on the supply side. If indeed we have demand that's taken care of, we better make sure that we've got enough supply. We're going to have problems. And we're already seeing that show up, as you'll see in a moment. But let's look at that population number in 2020 and break it out by age cohort, because that's another story, the demographics here. It acts like even though the number itself, the household formation and population are rising at record rates and will continue to, there's a demographic turbocharger underneath that, which is the biggest cohorts in our society are all in their home ownership years. And so the share of that rising number is also increasingly likely to be creating housing demand. I'll just highlight here, that's your baby boomers. Obviously the younger of them are the biggest cohort in Canadian society in their sort of late 50s or in early 60s. So not even retired yet. And where does research show that, we typically see an exit out of ownership housing? Somewhere out here, 85-ish. This is a story I've been hearing about my entire career. The baby boomers are all going to retire, downsize, flood the market with single family homes. The reality is that they're all still right now in their prime, like highest age cohort where they have the highest rate of home ownership. They're not moving up. They're not necessarily downsizing. They're not going anywhere. And so when we see the supply numbers a little bit later, and you wonder, why are there no homes on the market for sale? A big part of it is that they are occupied by people who aren't going anywhere right now, particularly not in a global pandemic. Now, the other group to highlight is the millennials, the kids of the baby boomers. That's Gen X, that's me in the middle, that saggy bit. And if you look at all of them, that's more like 10.5 million people. Half of them are in their 30s, the other half coming up behind. It's going to be moving into their homeownership years for another decade to come before this other group has moved out. And so we've got this bracket of this highest histogram age groups in all of Canadian society, completely bracketed over middle age, which is when you go into homeownership, but before you go out of it. People need to live somewhere. Lack of demand for housing is likely not going to be an issue going forward because the households are there, the people are there, they have to live somewhere, they're going to want to own homes. Do we have the supply is the question. And those things sort of have to be coincident. It's not like in some parts of China where they built entire cities and said, we'll fill it up later. But you also can't sort of miss by a number of years and all of a sudden have 10 offers on a very limited number of homes and prices going through the roof, which is, as you'll see, what we have right now. So we really have to keep these things sort of together. Supply was a big ask for our government advocacy this year, and I think you'll see why in a minute. Everybody wants a vibrant housing market. Right now, we're not vibrant. It's great to have a lot of demand, but it's just frustrating when there's nothing for those people to actually buy and move into. So let's have a look at the resale numbers that CREA publishes. This is the overall Canadian home sales trend on a monthly basis. Starts in 1988, goes till yesterday. Seasonally adjusted, I annualized it. So all I did was multiply every number by 12. And that just gives you over here on the left-hand side, a scale that compares to annual numbers. So if you think that a typical year in the last decade was about 500,000 or so sales, you can sort of look across and see that we've sort of been in that range. And then the ridiculous volatility around COVID. I think it's a neat analogy that when something as extreme as COVID happens, that it really serves to kind of squish and minimize all of these other things that we spent so much time analyzing and fretting about in the past. At any rate, using this annual scale over here, this arrow indicates where we were in 2020 as an annual number for sales, about 551,000. It was a record. It surpassed the 2016 number of about 539 by only about 2%, but we made it. Now, and it's actually right in line with where it was in February before COVID hit, which is interesting. Now, if I advance this next arrow here is about 583,000 sales. That's our forecast for 2021, this year. Some people might think that's optimistic. Of course, the CREA is going to say we're going to set record after record. Of course, they're optimistic. Well, quite frankly, if you look at where we are right now, in December, the annualized pace of sales, which was another all-time record, was about 714,000, okay? And so from a conservative forecasting standpoint, you don't want to get ahead of that, obviously. And so I think that we're actually being very conservative right now. And once we get a few months in the books, we'll know whether to adjust this up or not. At the moment, we're being very conservative. We're still delivering the message that the demand is very strong. We're likely to set another record. In my heart of hearts, I think it's going to be even stronger unless something changes drastically tomorrow. Unless we don't have a spring market again, it's going to be kind of hard to miss beating the year with no spring. I think that the challenge this year is going to be maybe the year with not a lot to buy. And why might there be not a lot to buy? Well, it's not on the demand side because of what I just showed you, but it could be on the supply side. So this is a chart of all active listings on every MLS system in Canada. And it's pretty amazing how much it's fallen over the last 5 years. One thing I would highlight is this is about 2015 when it started to fall around the time of the oil price crash. Sort of got ahead of itself in Toronto and Vancouver in 2016, 17. And, as you'll all recall, government policies were brought in to try to slow various things down, blaming it on whether it's foreign ownership or, vacancy. And then B20 came in. And so we had this period where this whole trend sort of stalled out for a while, made the market look weak. But under the surface of it, I think that this longer, very long cyclical, this one big hump of a trend in one housing cycle is longer than my entire career here. But ultimately, this is the direction it was going in, particularly with those very strong population growth numbers. By February 2020, we were sounding the alarm about the supply problem. Before COVID, there's predictions that demand was going to plummet and supply would balloon in the wake of COVID. Of course, what happened was even more people wanted to clamor after homes, so sales went up. And a ton of potential sellers locked their doors and said, you're not coming anywhere near my house, I'm not going anywhere. Maybe that should have been obvious in a year where the meta message was stay where you are and stay at home, that there'd be fewer home sellers. It's clear now. And so this was New Year's Day, basically, with the lowest level of supply on record. This is seasonally adjusted. If you look at the unadjusted number for December, or the end of December, basically New Year's Day, it's actually under 100,000 for the first time ever. And that's based on records going back 3 decades. So this is a major issue just starting this year. Now, when you divide the overall active listings number by sales, you get my favorite stat, which is months of inventory. If sales were to continue along where they are right now, and we didn't replenish any new supply, how long would it take for us to completely run out of homes for sale? You can see right now we're the lowest we've ever been. I'm going to overlay a couple of lines here. The way we sort of have these buyers and sellers market zones is by taking the long-term mean of this, the long-term average of this series, and we just add or subtract one standard deviation. It's a good way of doing it. There's other ways of doing it, but it gives you a pretty good range, and it sort of keeps most of the history within that range. And of course, you can see where we are now. It's absolutely unprecedented with 2 months of inventory nationally. This is a fairly new phenomenon just in the last few months. So we'll see how that plays out in 2021, because we don't even have 1 month of data yet, and we're certainly not into the spring market of 2021. Stay tuned, watch this space. I think it's going to be headline grabbing, and certainly I think it's probably going to exceed even the most optimistic forecasts. Although I don't think optimistic is the right word. When you've got prices and homes becoming unaffordable and frustrated buyers, it's not an ideal situation when things are this much out of balance. So what happens when you got unprecedented market tightness? You get unprecedented price growth. This is our MLS home price index, the overall of all property types, all neighborhoods, all municipalities, all markets, jammed into one line, seasonally adjusted. The best measure of prices you're going to get, the smoothest. You can see quite clearly that things were ramping up heading into this year as we expected. There was a bit of a pause in the spring. Of course, this is, people were predicting that was going to turn into a big crash. Of course, what happened then was there was no transactions, so there wasn't a lot of change to the transaction price. If there had been a lot of transactions where they were either rising or falling, this number would have risen or fallen. When there's no transactions, there's not a lot of change to the series. We reemerged in the recovery period to even tighter market conditions, and prices have absolutely taken off. And as I just showed you, this is only up to New Year's Day. We'll see what happens right now. Does it look like it's slowing down to you? None of these stats have shown any signs of even starting to turn a corner yet. They're only becoming more extreme. Now, if I break out that December number on a year-over-year basis across the country, this is what it looks like across the country on a year-over-year basis. In the most recent data published in December, everybody's up. If you were to see this sort of animated over the last half year, the relative price gains would be about the same, but you'd see everyone rising up every month. So everyone's tightening up, everyone's prices are rising up. This is west to east. So let's have a look at BC, between 5 and 10%, low single digits 6 months ago. On the prairies, depending on, Winnipeg, Regina, Saskatoon over 5% now. Calgary, Edmonton still weaker, but these were 0 or negative 6 months ago. There's Winnipeg, obviously joined the HPI this year, running at about 7% year over year in December. That was pretty much nothing in May. So that's really been, and if you were to see the whole time series, I promised Peter I'd stick to the national level stuff for this, so that'll have to be for another day. But there's a huge jump in prices in Winnipeg right when this recovery started, that's for sure, along with so many other places. Ontario, we don't have months of inventory in Ontario. We have weeks of inventory, and it's just prices have absolutely gone ballistic. An interesting distinction in Ontario is some of these lower numbers that you can see here. That's all Toronto. Why would that be? Well, it's a denser place, it's more expensive, and it's also more heavily weighted in the condo space, which isn't doing as well right now. So that's holding these numbers down for now. I do expect to see that story reverse once we're all vaccinated and back to normal, and restaurants and downtowns are a thing again. These big tall numbers you see, that's pretty much all cottage country, which has absolutely gone ballistic. I know that's the thing in Manitoba as well. I guess places that are outside of the commuter sort of sleeper bedroom communities, but it's where Canadians love to spend time. And if you don't have to commute in anymore, it's like, as long as you got an internet connection, that'd be a pretty sweet place to spend your time. And of course, Quebec and the East Coast also doing quite well. And that's been a story that we've watched develop very steadily for 5 years. At first they didn't even believe us, but here we are. And the last thing I'd like to talk about here quickly, because it's been in the news, is the property type distinction. What are people going after? What are they not going after in a global pandemic? And I think this was one of the ones that was really hard to get wrong, even from the very beginning of this. You spend all your time at home. It's got to be an office. It's the gym. It's the park. It's your kid's school. You want to have more space. You want to be away from people who might have this virus. So bigger single family homes further out, more structure, newer, bigger, less land value sort of thing. I've put in the COVID lockdowns here. You can see everything was sort of ramping up equally before that. Red hot markets in both the detached space and the condo space. Then we had that brief pause in the spring that I mentioned, and we have emerged into the recovery phase with people not so much wanting condos. So those are sort of, prices of those are sort of sliding sideways, whereas single family home prices have absolutely taken off. And so the way I've described it is, the condo market went from red hot to a lukewarm bath. It's pretty balanced conditions, actually, not much price growth, certainly not a bloodbath. Whereas the detached space has gone from red hot to absolutely white hot. And so that's what I had for you today from a slideshow standpoint. I'll stop my share now and come back online here and just say thank you very much for the opportunity. Thank you.